Hello, in this tutorial I'm going to demonstrate the significance of using charts and technical analysis in your trading decision, and I'll also be showing you where to obtain free charting platforms. The charting platforms available in today's market, there's a vast number of them with a vast number of bells and whistles at even more vast of a amount of price points. And freestockcharts.com happens to be a place where you can get free stock charts in multiple time frames, multiple asset classes, but best of all, it's free. And freestockcharts.com has been around through Warden Brothers for a good number of years. I remember them going back as almost 20 years ago. So in that regard, it's a well-known company, free service. You can see that in their free service they have some banner advertisements on the right hand side, and if you go to click to turn off the ad, it'll take you to a subscription page. But I'm not a paying member of freestockcharts.com. I use them for the free stock charts. So enough about freestockcharts.com. We're looking at how we set up our chart, and I'm going to demonstrate just a very simple applications for tracking price patterns in charts. And in my arsenal, I would use a daily chart, and you can just simply drop down here and see a daily chart, and you can see that this is the entire price action. Each bar represents a day, and you have to break it down even more for you, you have each bar is a single line, and each bar has a open, high, low, and a close. The open is always on the left hand side, and in these charts it's not represented as a dash, but in a lot of charting platforms it's represented as a dash. So on the left hand side you have a slight little dash to get a visual of where the opening print on that bar was, and if you're using a daily, that would be the entire day's range, and I'm highlighting December 31st, 2012. So the open was 1402.43. So that means that right about here was the opening range on the day. The low was 4 points lower, approximately 1398.11. The high, 1426.74, and the right hand dash on the side of the bar is the closing print. So we closed on December 31st, 2012 in the S&P 500. We closed very close to the day high, and the next day we opened 1426.19, and which was the low print of the day, and we closed again on the high. You can see on the following day, Thursday, January 3rd, 2013, you can see that the closing print was lower than the closing print of the previous day, hence the red bar. Now, this is a daily time frame. If you wanted to get involved in a more finite level of detail, we can say, okay, we're breaking out of a range here on today's action. I'm interested in seeing the last couple of days price action, and I want to see where the shorter term trend is. You can go to a 30-minute chart or an hourly chart. Let's go with an hourly chart. You can see that consistently since January 15th at 10 a.m. we have been in a consistent uptrend in the S&P 500. Consistent uptrend. You could see the trend is just continuing higher. And you can also see by varying I have stochastics up here, but you can also see by varying indicators, some which we'll get into more in other tutorials, indicators that can give you an idea of what is to come in the future based on past performance. But generally, we're looking at a very consistent uptrend since January 15th. Now, the significance of being able to go back to a daily and then an hourly, and then even more of a finite level. Here's January 15th, and you can see the 13th and the 14th, the 11th and the 14th, which was Friday and Monday, were kind of lackluster, weak, not very big bars, but they were just, not really continuing in that uptrend. And as soon as we reversed on the 15th, we continued that rally. So from a daily standpoint, I look at the daily chart and I say the market has underlying strength. And from a longer perspective, if I was looking at trading the market from a 24-hour period to a 24-hour period, I would say the market, you want to be on the bullish side, the long side. If I went down to an hourly level, I'd say the same thing right here. I'd want to be looking to go long on any pullbacks, providing they're not, very big. Now we'll go to a more refined level of 15-minute chart, and you can see on a 15-minute chart, this is today. This line represents a day. This line represents a day. You can see the 16 down here for January 16th. You can see the 17 down there for January 17th. Now you can expand this chart to include more days or less days. It's real simple to use. You just point and click and drag. So right now we have an interesting situation. We have two down bars on the hour, which was the on the 15-minute bar, which was 10:45 to 11. And from actually 10:30 to 11, we were in a downtrend, and that reverted to the upside. And we've been in an uptrend for just about 45 minutes. And we're starting to get mixed signals down here on the 15-minute level in the stochastics. If you recall, on the 60-minute, the hourly, the stochastic seems very strong. The stochastics RSI indicator, excuse me. And again, there's a plethora of indicators that you can use. I'm just demonstrating with stochastics, and I'll get into the details of stochastics perhaps in another demonstration. But for the purpose of this demonstration, I'm just going with an arbitrary indicator, and I'm going to read the indicator arbitrarily. So in this situation, I'm going to go back to the 15-minute, and I'm going to see that price is printed higher, but yet the stochastics has really not gotten higher. In fact, the moving average is below the current price. The moving average of 5 periods is below the actual stochastics RSI. So in that regard, one might interpret that uptick was not really not very impressive. And I'm going to go down to a 5-minute to see. And you can see that right now, although we're in a daily bullish trend, although we're in an hourly bullish trend, and although we're in a 15-minute strong trend, this trend could very well be broken to the downside on a finer level if we get a couple of red bars here. Now, if I wanted to take advantage of a quick trade, to take advantage of a 5-minute time frame, I would go to trade something that has a short span, a short binary option that expires in several minutes or even 60 seconds. Or I would go with a quick trade where I'm selling the market with the anticipation of buying it back relatively quickly, a relatively quick point in time. The point is, on a 5-minute chart, when you have a random bar that has a high of 78.86 and a low of 78.24, that's only a 50-60 basis point range. You don't want to enter a trade based on a 5-minute chart that you anticipate making 6 points in the S&P. If you are looking to enter a short trade on a 5-minute trend and you're looking to capture a 50-cent move, 50 basis point move, that is more in line. And the same can be said for the 15-minute, the hourly, etc. If you have an average range on a bar, a point and a half, taking a point and a half profit on on a binary option that expires in 30 minutes or an hour would be suffice to say it's within reason. Same thing on an hourly and a daily. So again, do not trade short-term binary options that expire in 60 seconds based on a daily chart, because you want to match your trade to the time frame that you're evaluating.